The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien coming to you live from TFNN Wednesday morning, just after 9 a.m. Eastern time. We got markets pretty much flat, a little bit of volatility this morning. We got some jobs number to kick things off. That's a 1-minute chart. Let's put it back to a 15-minute. And boy, you talk about some action yesterday, man. You trade from a price point on Monday of 4,082. Yesterday, the run begins at about 4,060. Chairman Powell, higher for longer is the trend on rates. We trade from 4,060 yesterday. You spiked down to lows on the session, approaching 39.80 this morning. We're basically chopping around right at those lows at 39.91. Now, I'm going to back things out a little bit further, okay, to show you an ABCD potentially on this chart, man. You look at this run, okay, folks? Now, real quick, taking a look at some Fibonacci numbers here, okay? Check it out, folks. From the highs we had, basically February 15th in the market, we were pushing about 41.70, maybe 41.75 at that price point. You trade down about 250 S&P points. I think the A to B leg really lines up at about 240 points, something like that. So you trade down A to B leg, potentially 240 point A to B leg. You come up to a 618 retracement almost to the tick, and then, man, you roll over, and just right now, you're solid 2% basically where we were off those highs. And if this A to B, C to D leg finishes out, you're talking about an area of about 38.30, maybe something like that. Now, the interesting part about that is, where does 38.30 line up on this chart? You know where it lines up on this chart is? Right where we were at the beginning of the year, folks, right? Check that out. So I know you got to extrapolate that out. That's just an example of your C to D leg. We'll see how we come into this B point, okay? As my dad says, we'll see how we come into it with some volume. We'll see how we come into that price point. We're almost there. I mean, that price point on your B is about 39.25. You could make the case that area is going to begin at about 39.50 in terms of touching that area on a few occasions. We're trading right now at 39.90. You trade down to 38.25 if we get that price projection, okay? Number one, you're coming into the area that we had at the beginning of the year. And what that also does, okay, excuse me, let me back things up on a daily. What that also does, okay, that puts us to 38.25 right there, right where we were prior. And what it also does is, I believe this is the Fibonacci number it comes off. Yeah, it is. There's 618s everywhere in this market, folks, okay? That would be a 618 retracement. Basically, from the lows of 3,600 to the highs of 4,200, you trade down to a 618. That would bring you back to the start of the year. That would complete the A to B, C to D formation. There's a lot going on there, man. We'll see where we go. But boy, quite a day yesterday, and today we kick things off with some jobs. We'll jump around to that in a moment, but let's start things off with crude. You talk about some volatility, man. $75 up to $81, back to $76. Crude with some action. Gold contract down to about $2. With some dollar action in a big way. We're going to be talking to our man Teddy Kegstad coming up at 40 past the hour, as we do every Wednesday. You look at that run yesterday, man. How about almost a 103 handle to almost a 106 handle? That's what we did yesterday, man. Whew. We're getting a little bit of a reprieve today. But boy, I don't know if the market digested a whole move from 104.1. Okay, now we came into the trading session when Chairman Powell started to make his remarks. The dollar was at about 104.64, so we're up a full point since then. But boy, quite a run in the dollar index. That's putting a hurt on the gold contract this morning, putting a hurt on many things, right? And you check out notes and bonds, little bit of a reprieve, pretty interesting action. You got the 10-year, man, back to before Chairman Powell. Really wild stuff, man. Dollar much stronger, okay, but yields basically back to where we were. So why is the dollar so much stronger if yields are back to where we were? Why is the market so much lower? But boy, there's a bunch of facts to digest in this market, that's for sure. Let's check out the VIX. Finally getting a little bit of a spike, but still well off 20, and well off where we've been recently. And you check out the VIX, you just put it on the last year. Boy, the VIX looks ripe for an acceleration. You think we have anything like fear in this market, man? Take a look at that VIX chart, just going back to last year. It's been a new territory of between about 18 and 24 in that volatility index. Right now, we're trading at 1984 as we come into a very important day in the market as we get Chairman Powell. He'll be in front of the House today. He was in front of the Senate yesterday. We get non-farm payrolls on Friday. We get CPI data next Tuesday, 6 days from right now. And we get a Fed meeting 2 weeks from today that wraps up. Pretty awesome in terms of the couple weeks, the data that we're going to get, and the market starting things off with some volatility. And we'll kick it off with some jobs. Private payrolls this morning from ADP up 242,000. Gain led by hiring in leisure as well as larger sized firms. Been the trend recently, continuing. After an upwardly revised 119,000 in January, leading the way, leisure and hospitality, 83,000, financial activity, 62, manufacturing, 43, natural resources and mining. How about that? 25 on the downside there. Construction, not surprising, and professional and business services down about 36,000. Businesses with more than 50 employees contributed strongly, while small firms shed jobs for a fifth straight month. Winners and losers, man. The small firms right now in this market, not really adding the jobs. It's the big firms that are doing it. And we get the jobs number on Friday, man. We'll see where they go. Workers who stayed in their jobs experienced a 7.2% pay increase in February from a year ago, the slowest in 12 months. For those who changed jobs, the median increase ticked down to 14.3%. Those are some wild statistics that haunt Chairman Powell, folks. I'm kidding, slightly in jest, but yeah, you stay in your job, you're getting 7.2%. You change your job, you're almost getting 14%. Both of those numbers, though, down from the highs. But boy, those are some staggering numbers, and those are going to persist if they stay anywhere in there. We got chief economist at ADP. We're seeing robust hiring, which is good for the economy and workers, but pay growth is still quite elevated. Yeah, I would say so. Neela Richardson, chief economist at ADP, the modest slowdown in pay increases on its own is unlikely to drive down inflation rapidly in the near term. Well, folks, if you need somebody to tell you that if you're staying in your job, you got a 7% raise, and if you're changing jobs, you got 14%, and if you need someone to tell you that those numbers aren't going to help bring down inflation rapidly, I don't know what to tell you, because of course they're not going to bring inflation down rapidly. They're not even going to bring it down, not even rapidly, right? They're not even going to bring it down. Take the word rapidly out of there. That is going to contribute to inflation, folks. When you have 7% wages and you got 14% wages on a yearly basis, pretty staggering stuff. And all of that ahead of the numbers that we get on Friday for non-farm payrolls. And that'll be a big one as well. It's a dicey market, man, in terms of we close at the lows yesterday. We chop around at those lows all overnight, and we got an opening bell coming up in 16 minutes from right now, man. And yeah, I see a lot of risk to the downside right now, folks. Over in Europe, you got the DAX up about 4%. 0.4%. FTSE up about 0.1%. And folks, if you still want to, there is still time to get into the live trading webinar with our man Larry Pesavento. It just kicked off at 9 a.m. Eastern time. We got a bunch of great traders in there. I was in the room early this morning. They're chatting. You can check it out on the front page of TFNN. $295, folks. Only $295. You get the newsletter, which is $97 for a month. We'll get you in that room. It will be archived, so you can watch those few minutes you missed and check it out today, 9 till 2. Our man Larry Pesavento. Hopefully we get a good day of action. Stay tuned, folks. We'll be right back with Kevin Hincks. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years years' experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. We got the S&P futures up by 3 points right now. NASDAQ 100 barely in the green by 19. You got the Dow up 35 and the Russell up by 4. Let's jump over to our man, Kevin Hincks. Every trading day, folks, 12 noon Eastern time. The TD Ameritrade Network right here on Tiger TV. Fast Market with Kevin Hincks, Tom White, the whole team at TD Ameritrade Network. 12 noon Eastern time every day, folks. Check it out. Boy, we got some market action. Kevin Hincks, we've had a few things change in this market since I talked to you 24 hours ago. Good morning.
Good morning, I'm O'Brien. Excuse me. Yeah, a lot on Jerome Powell testimony day 2, and for the House Financial Service Committee should be another interesting day. I thought yesterday was riveting in some of the testimony he gave. And, you know, it's interesting, Tommy. A lot of people think that Jerome Powell was hawkish yesterday. My pushback is he gave an accurate assessment of where inflation is. Did that sound hawkish? Yeah, it had to, because inflation is reignited on the upside. And where he pinpointed core services, ex-housing, travel, leisure, and today's ADP, leisure and hospitality, $83,000. We're looking at a JOLTS number. The expectations are for it to come down from 1 million to 10.6. My question then is based on what? What information other than hope are you giving for this number to come down? None of the data shows that the are getting higher.
Yeah, it's pretty wild. I don't know about hope. Hope is not a plan. Is that the expression, right? Whatever it is.
It's not a business model.
I agree, man. Some pretty wild stuff. And we got a pretty calm market, which I find so interesting as well, Kevin, this morning, right? We got the ADP you just talked about. The market pretty much just digesting yesterday, pretty much at the lows of the session, under 4,000. We chop around a bit. But as you said, man, we got Chairman Powell yet again. And this all 48 hours ahead of non-farm payrolls on Friday. What did you think of the wage gains, Kevin? On ADP, I have here 7.2% if you stayed in your job in February from a year ago, the slowest in 12 months. And then you have 14.3% if you change jobs, and I found it interesting, Kevin, they had a quote in here on the Bloomberg article from Neela Richardson, chief economist at ADP, and their comment was, the modest slowdown in pay increases on its own is unlikely to drive down inflation rapidly. And I said to myself, 7% pay increases in your job, 14% if you change, and the comment is it won't slow it down rapidly. I don't even think that's going to slow it down. Where does rapidly come from? I know wages have been big in the conversation. What did you think about some of those wages if you saw that in the number this morning?
Yeah, my first thought is I wonder how many people see that data, 7.2% if you stay in your job, 14.3% if you change jobs, and immediately update their resume, Tommy,
right?
Because those wage gains, if you're changing jobs, are pretty substantial. Oof. So, yes, I all we can do is look at the data and look at the reaction to the data. Yesterday's reaction to the data in yields actually were very modest, and yields are now down today, but it was the dollar that spiked yesterday. Why? Because remember, the dollar currencies, who's ever more hawkish, that's the way the dollar moves. So the dollar spiked yesterday on Jerome Powell giving an accurate assessment of inflation and therefore being more hawkish really made the dollar spike yesterday. Tommy, I thought that was really interesting. We'll see what happens today, but interesting start to the day with yields down to 3.92 this morning.
I wasn't necessarily going to touch on it, but since you brought it up, we got the dollar spiking higher. I mean, we almost had a 103 handle, and what are we at right now? You almost went to 106 if you take like the low yesterday to the high of 105.83. Pretty interesting, Kevin, that we have such a higher dollar. And meanwhile, you make the great point that we got the spike in yields, and the yields are basically right back to where they were before Chairman Powell started speaking at 10 o'clock. I'm not sure what to make of that one myself. Do you think anything? This is an impossible answer, but pretty interesting, right? That the dollar charges higher and then yields, what do? They give it back, actually. What do you think about that relationship right now?
Yeah, I think it's remember, the yields are based on rates, and the dollar is based on that relationship between the hawkishness versus the hawkishness of Europe and other countries. And European inflation has been running hotter than the U.S., and the perception was that Europe was going to have to be more hawkish, and they are stating that they're going to be very hawkish. But yesterday, Jerome Powell gave a new level of hawkish here in the U.S., and I thought that made the dollar recover versus other foreign currencies. So how this plays out, I don't know, Tommy, but here's what I do know. March 21st, 22nd, we're going to get more dot plots from the Fed. They give them out 4 times a year. March meeting will be one of those. I expect all those dots to go higher. Jamie Dimon coming out thinking that rates will have to go to 6. I don't disagree with that. Rates are going to come out. That median range is going to be higher, Tommy. And like I've said before, talking to you, I've said it on the air at TD Ameritrade Network, it's the spending. Jerome Powell can't curb the spending. He stays out of politics, but the spending is what's keeping inflation high. Jerome Powell has one tool, Tommy.
It's just so amazing what's going on right now, man. We've never dealt with it in my lifetime, and for everybody that just thinks that it's just going to go away very quickly, maybe it's hope, maybe, and it might happen, right? We don't know, folks, for sure. But boy, you better understand that we're approaching something, man, that we haven't dealt with, and we are still a very lot. Those wage numbers, man, I looked at those, and then I saw the comment from ADP chief economist saying it's not going to bring down inflation rapidly. I said, what world am I living in, man? Of course it's not going to bring inflation down rapidly. We get 7% wages if you stay in your job and 14% if you leave your job. Pretty remarkable, man. With that in mind, Kevin, what are you guys talking about on Fast Market? Along with, I'm sure, some Fed action coming up today at 12 o'clock.
Great show for you today, Tommy. JD.com in the first segment. And then Like Folio will do a presentation on BJ, the wholesaler. And then we'll look at Microsoft in the final segment. So high cap tech in the final segment, 2 earnings plays to start the day.
And give us a little teaser on JD if you can, Kevin, because that combines a lot of things going on, of course, with China right now. This stock down from 65 to 45, man. What do you think the whole geopolitical as you get into some of these equities that have just been hammered, of course, in China? JD at 46.57 right now.
Yeah, and therein lies the problem with a lot of these names, right? People are shying away from investing in stocks that are connected to China because of the regulations, the COVID shutdowns. So there's inherent risk in some of these names, and I think that's why you see Baidu, you see Alibaba, you see JD.com, all trading, even Wynn Resorts and some of the casinos. You see them trading at pretty low levels. Some of them have made some recoveries, but nowhere near where they were. That's because the inherent risk in a China proxy or a China stock.
Geez, and as you mentioned those stocks, I jumped around, and you've talked about it many times. If you do want exposure, folks, maybe you go to a Wynn or a Las Vegas Sands, and boy, on the charts, Kevin, they've held up much better than some of those other companies like JD and Alibaba to kick off the year. We appreciate the time on a busy morning, as always, Kevin. I look forward to the show at 12 o'clock, and we'll talk to you tomorrow morning, man, as usual.
Have a great day, Tommy.
You too. Folks, check it out. They're going to be talking about 3 great stocks, and pretty interesting there, right? You jump around. JD, look at these stocks slamming lower on the beginning of the year. Down. Alibaba, down from almost 125 to 88. And then you look at companies like Wynn, huge exposure to the gambling over there in Macau, just up dramatically to kick things off. Stay tuned, folks. Going to be an interesting Wednesday in the markets. We're coming back for the open.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open, and you got markets in positive territory to kick things off right now. Going to be interesting to see where today goes. We get a strong ADP number. right? If you get a strong jobs number on Friday, man, watch out in this market, especially if wages come in hot as well. We get the S&Ps up by 2, but boy, as Kevin mentioned, I would keep your eye on what's going on in notes and bonds and which one is going to win out here, because we have yields dropping, okay? Now let's just see what we're at right now on the 10-year. We're talking about a 10-year at 3.91. You're down like 0.1%, just like that, man, from where we were yesterday on that spike, okay? And meanwhile, what do we have? We got the dollar index pulling back a bit, okay? We're seeing the pullback right now. That's the spike as we open. Okay, but boy, in context here, the dollar index is almost a full point above where we were at yesterday. And we'll talk to our man, Teddy Kegstack, coming up in the next segment, about 10 minutes, 40 past the hour, as we do every Wednesday. And I'm going to be interested to see how he thinks in terms of this relationship, because usually, folks, you get higher rates, you get a stronger dollar, okay? You get lower rates, what do you get? You get a weaker dollar, because people aren't going to be going after those lower rates as much. But boy, it's not happening right now. S&P's down by 3, and we got a caller on the line. We got our man Jose from Lakeland. Jose, good morning.
Hey, top of the morning. I had to check in today because anytime Powell or any Fed chairman goes before the Congress, the senators, to answer questions, why does Wall Street, here's my question, it's kind of rhetorical, but why does Wall Street play this game year after year, decade after decade, that they had no idea what he was going to say? They had no idea that he was going to be hawkish. We thought he was going to be dovish and start, with this pivot. I mean, it's utter nonsense. Why do they do this? It's mind-numbing.
That's what makes a market, man. I hear you. Some of the times he's appeared, though, or some of his press conferences, and I've lost track a little bit which one lines up where, but one of the most recent ones, man, was it after the last hike, or was it just when he was appearing somewhere? When he said the disinflation process had begun, that almost surprised me the other way, Jose. You know what I mean? And saying, man, with all these numbers out there, to be out there as the Fed chairman and to confidently be stating the disinflation process had begun, I found obscure on that side, and so then what does he do? We get a little bit more data, I guess. We come in front of Congress and he says we're going to be higher for longer, because, boy, those words really struck out, man, on that press conference where he said the disinflation process had begun. If the disinflation process had begun, right, I don't think they would have wanted the conversation to be that they had to go 25, and then go back up to 50, right? And that's where the conversation is. So I think he got a little bit ahead of himself there. I don't know. I wish I had the answer, man. But, the things he said yesterday, right, I agree with you, man. How can you not realize that, hey, things are heating back up? You better believe that. A 5-year-old
could go over the statistics with, the amount of income in the jobs report, the amount of jobs being created. Sure. Look, I lived in the 70s through, Nixon and the Great Recession, if you want to call it that. I don't recall a recession where you had so many variables and tug of wars going on here. You've got too much money in the system, obviously, from QEs going on, which never should have been happening. And no one takes responsibility. No one will audit the books of the Fed. Well, have the Fed's books ever been audited? No. But I've never seen this situation where you have so much money in the system, people aren't stopping spending money.
No.
Inflation is rampant, rates higher for longer. In the 70s, there was no question. You had inflation, but there were no jobs.
Yeah.
You guys were taking paper route jobs to make ends meet in the morning, and things were clear back then. This is like a riddle wrapped in a mystery inside an enigma. This is total nonsense. A 5-year-old
I agree with a lot of what you're saying, man, because you look at the unemployment, right? I mean, the unemployment rate is so low. Kevin Hincks was talking about the JOLTS number, the job openings number is so high. And then you get numbers we talked about on wages, man. Well, of course, people are able to spend money, because if you change a job right now, Jose, you're making almost 15% more than you were a year ago. That's amazing, man. That's not usually what's happening, right? As we're worried about economic hardship hitting across the board to bring down inflation. I'm pretty sure that's not how usually things go. That's actually one of the most worrisome things in my mind, is you put that out there, right? It's like, wait a second, man. Maybe we're really not even close to the pain that we need. And hopefully that's not the scenario, folks, But just like you say, Jose, man, this is not how it's supposed to kind of cool things off when you see those wage numbers. And that comment, I'm not sure if you were listening, right, from the chief economist at ADP saying those numbers aren't going to bring down inflation rapidly. What world are we living in, man? Of course 14% wages aren't going to bring down, and 7% in the same 7% in the same job. Think about that. 7% in the same job. You didn't even change jobs, and 7%. Pretty amazing, man.
Yeah, that is amazing. It's not going to help the Fed. The Fed is really stuck here. Look, I don't know why people think that zero unemployment is a good thing. You need people walking the streets with resumes in their portfolio, so employers don't have to grab someone from another job and pay outrageous wages to get that person. You need unemployment. You need people walking the streets with resumes looking for work.
Yeah.
But
what you do need is you need inflation under control.
Really, yeah,
right?
This is
you need inflation under control because, the people who need it most, folks, and Chairman Powell said it at some of his press conferences to his, right, those are the people that get hurt so bad, man. And the economy, we've never seen it in my lifetime, Jose, right? I'm about to be 43 this month. I've never seen anything close to it. I was born in 1980, man. And I don't think we realize, and we're getting a quick glimpse of it right now, right, in terms of how quickly it can devastate everything when you can't buy the things you want to buy, man. And if the cycle is just beginning right now, where, we're just getting it under control and we're going to start to feel that hardship and employment's going to start rising. I mean, there was a comment from one of the senators yesterday, I forget which one, but they were saying, statistically, if you look at history, if you want the inflation to come down to this number, you're going to have unemployment go up to this number. And there's a lot different with this time period in history than prior, okay? It's not always the same. But some of the numbers he was throwing out, man, in terms of, inflation, to bring it back down to 3%, 4%, unemployment has to go up to 6%. And he threw out something like 8%, 10%. It's who knows, man, because, this is not how it's supposed to work right now.
Right. Look, if I was working for Mitt Romney, I'd say, Mitt, get out there and ask this guy, Powell, this question. One question. If you don't, I'm going to mess up your hair. So get out there and ask him, did you feel threatened by Trump's comments every month that he was going to lose his job and he wasn't happy with you? Did that influence your decision not to start raising rates in 2018 when you should have been? This guy wanted to please Donald Trump with a 15 GDP.
Listen, I don't think the pressure and the politics are good, but they come into it, man, and that's the legacy he's going to have to deal with if it comes, man. And boy, we're going to find out. And markets, we're negative by 2 points. It's going to be an interesting week. It's going to be an interesting couple weeks, man, for sure, in terms of where we go to the next Fed meeting. 50 basis points on the table again, which is pretty remarkable, especially if disinflation had begun. If disinflation had begun, folks, you don't have to start going up at a more rapid pace than you have. That was not the plan, so be aware of that. Yeah. Jose, I appreciate the call as always, man. You have a great day. We'll talk to you again soon.
Thank you.
Thank you. Folks, give us a call, 877-927-6648. When we come back, we're going to be talking to our man Teddy Kegstad. We'll be talking a little bit of Forex. Stay tuned.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got the S&P's pretty tame action so far. You're negative by 2 points. You got markets rolling over slightly. NASDAQ 100 hanging on to gains, up by about 7 points right now. Dow off 9 points. You got the Russell off by 3. Let's jump over to our man, Teddy Kegstad. Every Wednesday, folks, we talk to Teddy at 40 past the hour. You can read Teddy's outstanding Tiger Forex report, folks. Every Monday, he puts out a new issue. He puts out updates throughout the week when warranted. You can check it out under the newsletter tab on the front page of TFNN. It's $97 a month, folks, and you get it for 30 days, risk-free with a money-back guarantee. And right now, folks, you're seeing it. We're talking about yields. We're talking about the dollar, right? It's driving so much of this action going on. Teddy Kegstad, good morning.
Good morning, Tommy.
Boy, it seems like we always got an eventful market when we bring you on Wednesdays, Teddy, but it seems like that's par for the course these days. Where do you want to begin? You want to talk a little bit maybe just about what we got yesterday with the move? Pretty interesting. I'm not sure if you were listening to the program that we got dollar higher, right? We got some yield moves, and then the yield kind of pulls back. What do you think of the action right now with maybe the dollar, the yields, or just the general consensus of what we saw yesterday? Some huge action following the chairman's speech, and he does it again today.
Sure. Well, I think that yesterday, I mean, before he started speaking, it was an opposite situation. The dollar was under pressure, and yields were pulling back and stuff like that. And it looked like it was going to be a different type of day, obviously, once he started speaking, and I think the biggest thing is that, if you look at how the narrative has changed, I mean, just over the past couple of weeks, the consensus was all about the Fed stopping its hawkishness and becoming even possibly dovish at the end of the year. Right. Now they've been proven totally wrong on that direction, which they've been talking about for months. And now they've gone flip side too. It was breaking news. Powell thinks we have too much inflation. Rates are going to go to the moon now. Right. I mean, I saw projections yesterday that they're looking at, they went from saying no more rate hikes, to saying that, there's going to be excessive rate hikes. I was looking at the forecast now. They're looking at every meeting to be a 0.5 point to 3/4 of a point going throughout the rest of the year. I mean, I started laughing when I saw that. Okay, I mean, you're talking about a pendulum shift that's so nonsensical.
My eyes blinked a few times when you said that, Teddy. I stuttered. Seriously, yeah.
Right, so, and I think that you have a lot of overkill that went on yesterday, especially with that kind of stuff,
Yeah.
Now, today I think you're going to see a little bit more of a calm trade until Powell speaks again, but he's already said he's not going to say anything different, right. It's just going to be a repeat,
Yeah, so day one was the event for sure,
Yeah. So, and yields put in a nice high, back on Friday. They had a big surge that pulled back, and you had follow through today. I mean, look at today. The bonds are up. The 10-year is up, So, I mean, are rates going higher? Absolutely, but there's this is a profit-taking move right now. I would use caution, just saying, that you're going to see yields go up very, very quickly. Wait until they pull the trigger. We know now that the target point for sure is going to be much higher than originally expected just a couple of months ago. So the market will adjust to that. But I wouldn't get too overly, caught up in it actually today, especially.
Nice. And it is pretty remarkable, man, when you look at where we are just in equities, and you did a great job just talking about, pretty wild how recently this market was talking about the idea that we would be cutting. You'd get laughed out of the store right now if you talked about that conversation. And meanwhile, the markets have some volatility, man, but since the market has figured out that aspect of things, we've held up pretty well, man. Even this year, we're talking about a range from 38.50 to 41.50, and we're right in the middle of that range right now. And meanwhile, we got yields you just talked about, 50 and 75. My goodness, the market, if that ever comes to fruition, watch out, folks. 4,000 on the S&P is not even close if we start getting 50 and 75. I don't think that's going to happen right now, but who knows where the data goes, right, Teddy? It's like we've seen the data defy. If we get a number on Friday that blows things away and we get a hot CPI again or something, everything's on the table. So it's pretty wild.
And I think you hit the nail on the head there, Tommy. I think that's exactly what's going to happen with these numbers. They're becoming more and more important. This is like the old days, when the interest rates start to swing because of these numbers. Odds are unemployment's going to be relatively low. There shouldn't be a big shocker in that number, So that means more hawkishness with the Fed. CPI and PPI, even if they're not as bad as expected, if they come out even better, they're still not going to be good numbers, relatively speaking. And I think that's something we all have to really keep in our main focus as far as driving through the markets over the next couple of weeks, especially.
I think one of the things I deal with myself, right, is it's like a human tendency, man, to think that we've never dealt with inflation, so of course it's going to abate, and I'm trying to train my own brain, to say, hold on a second, man. Like we just had 0% interest rate forever, basically, and ballpark and everything, exaggerating everything. And we got generational inflation. Who says that it doesn't go away in a year, man? And all of the numbers we talk about, I'm not sure if you heard the caller. We got Jose from Lakely. He's right. It's like no one's out there looking for a job that can't get one right now. It's like the wage numbers in the ADP, 7 and 14%. I just feel like we got a long way to go, potentially. And we get to find out every month with the data. But, boy, I see a big risk that this thing is a battle. My dad's been on there talking about dramatically higher rates, and you just better be planning for the possibility, folks, because it's very hard to imagine that this thing just drops to 2%, and we're seeing how much of a struggle. Not supposed to get sticky at these levels, right, Teddy? And boy, we're getting sticky, if not actually going up, which is remarkable. Where else do you want to jump to on currencies, Teddy? Where do you want to go?
Well, we've had some nice moves. The dollar obviously had a nice spike high yesterday. Today, I think you got to watch out for it, especially with yields going lower, that I think you're probably going to see a little profit taking in the dollar versus most currencies. The yen, I think, is really peaking into a resistance where it's at. The pound actually made a really nice new low yesterday. I think you can see some follow through with that over the next couple of days. The euro is trying to hold up. I think that one's going to probably have the one that's going to have the least likelihood of having a really good move. The pound, I think, is where you're going to see the volatility. The U.S. dollar yen, I like it to the long side, but I would be very tight with my stops, because I think that you're coming to where you could have a big sharp pullback there.
And for those listeners that haven't heard you talk about it before, Teddy, so you put out the Tiger Forex report every Monday, and I know that subscribers, I'm pulling it up right now, they also gain access to a live webinar you did talking about Forex strategies and fundamentals. I'll pull it up here so they can take a quick peek. About a 60-minute webinar that subscribers gain access to if they check out the Tiger Forex report. Can you just tell the listeners, Teddy, what you talk about in that webinar, and it's what is behind the Tiger Forex report, kind of how you talk about, how you put together your newsletter on a weekly basis?
Sure. Well, I started out with the webinar putting the main components of the variables that impact currency pricing. So we look at yields right off the bat. We look at the dollar index, which gives you a broad basis of how the major basket of currencies is trading. And then we would look at that relationship with how it either is in tandem with certain currencies as far as trend, or if you have divergence, And then we look at the yield curves of the bonds, in the 10-year versus other countries. We compare the central bank action, what they're doing, which right now we're in central bank wars. It's a very great time to be looking at yields because you know that there's going to be lots of action. It's not like where anyone's sitting there scratching their head being like, gee, when's the next time the Fed or the ECB or something is going to make a move? Well, we know pretty much it's on every single meeting, So we delve into that and then use that, like, for instance, how that'll drive certain currencies like the euro and the pound, and then we also integrate oil as well, because oil is also affected by interest rates and also the price of the dollar. Like, why is oil retracing right now? Higher rates, more expensive cost of carryover, more expensive dollar. Oil's traded in dollars. It's more expensive for oil. So you're probably seeing right now a lag in purchasing because of that. And that's helping to hold the prices down. So things like that is how we look at it. We put
Folks, please check it out on the front page. Newsletter, Tiger Forex Report. Teddy, we appreciate it, man. We'll talk to you next week.
Sounds good, Tommy. Thank you.
Okay, we'll be right back, folks.
The Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We have markets, pretty tame action. Maybe they're waiting for the chairman yet again. Interesting, following the ADP number, right? Especially interesting considering the action we're getting, whether it's the dollar index, like Teddy was talking about, man, pulling back a bit, maybe some profit taking there, up to 105.8. You were almost at a 103 handle to kick things off yesterday. And then we get yields. Right? Man, the yields, what are we at? We're probably about 3.92%, something like that. The yield on the 10-year right now. We're going to jump around to a couple equities with some action. Tesla, let's see how Tesla's trading today. Regulators coming after Tesla. And boy, sometimes, folks, I don't really like Facebook. I do like Instagram. Tesla shares down 3.4% right now at 181.24. Sometimes I find myself getting caught down an Instagram rabbit hole of watching, unfortunately, and this is just how they'll send it to you, like crazy videos of Tesla self-driving vehicles doing insane things, getting people hurt or killed. Hopefully not killed, but it's just wild stuff in terms of how often they fail. And this one, though, has to do with the steering wheels just falling off, man. Tesla, after steering wheel is detached from two moving vehicles. I've also watched some YouTube videos, man, of just the quality of the way a Tesla is put together for the price you're paying versus a premium vehicle in terms of that real quality that you're getting. And Tesla's just not there from my perception. Listen, I don't own a Tesla. I don't own any shares. I'm not short Tesla as well. But I'd be careful of that equity, man, because there is still a lot of optimism priced into Tesla. You talk about companies with some woes. How about Southwest? Yeah, they're going to spend some capital to try and avoid the debacle they had with their snowstorm earlier in the year. And who are they turning to? Amazon Web Services, man. Deals not disclosed in terms of the terms, but they're going to be modernizing technology in the wake of that December meltdown. Always interesting. You wait until afterwards to take care of that business. But they're going to use Amazon. They already use Amazon for a couple of their products. They use, they already use the AWS for gate management and departure control programs, but now they're going to use them for a large-scale migration, and that is going to talk about, they're going to do a lot of stuff. Either way, we'll check out Southwest as we wrap up the program. Southwest up today, 0.7%. Markets in the green. Stay tuned, folks. It's going to be an interesting one. Basil Chapman up next. Live programming all day today. Have a great one.